All right, let's dive in. Today we're tackling Carvana. Is the stock a buy?
Yeah, it's a hot topic for sure.
Big time. I mean, the stock's been all over the place, hasn't it? Like from crazy growth to, wow, a big drop and now back up near those all-time highs.
It's a wild ride, that's for sure.
So are we looking at a hidden gem or a potential train wreck waiting to happen?
We'll see. That's what we're here to figure out, right?
Exactly. And we've done our homework. I mean, we've got market analysis, financial reports, even some customer reviews.
Oh, and don't forget that short seller report. Always makes things spicy.
Oh, yeah. I almost forgot about that one. And let me tell you, some interesting stuff in there, some surprising things we found, including, well, this feature on their website. You just wouldn't expect it from a used car company.
Oh, that's interesting. What is it?
We'll get to that later. Got
Yeah.
to keep you on the edge of your seat, Ray.
All right, fair enough. Teasing us with the good stuff.
But first, before we get to all that, let's take a step back. What exactly does Carvana do?
So basically, their whole business model is about shaking up how we buy used cars, like
Yeah.
ditching those traditional dealerships and taking the whole process online.
Yeah, the whole online thing, definitely a big trend these days.
Right. So imagine this. You're browsing cars, financing, even purchasing, all from your couch. That's got to be appealing to some people, right?
Yeah, no more pushy salespeople, no more spending your whole Saturday at a dealership. I can see the appeal.
Exactly. Convenience, transparency, and let's be honest, a much bigger selection than you'll find at any single dealership.
I did notice that they offer a 7-day money-back guarantee. That's not something you see every day, especially with used cars.
Nope, not at all. I think that really shows how much confidence they have in the quality of their vehicles. It's a big signal to customers like, hey, we're not trying to pull a fast one here. You can trust us.
Yeah, it definitely gives you that sense of, okay, maybe this isn't as risky as I thought.
Exactly. And while selling cars is their bread and butter, right? They've also got other things going
Oh,
on.
yeah. Like
Yeah.
what?
Financing options, for one. They're even running a wholesale auction business, which is interesting.
So not putting all their eggs in one basket, huh?
Smart move. It lets them tap into different parts of the used car market, which, by the way, is absolutely booming. Like, seriously
What
booming.
kick are we talking?
Projections say it could hit like $2.7 trillion globally by 2030. That's trillion with a T.
Wow, that's a lot of used cars.
It is. Huge potential market for Carvana to grab a piece of. But they're not just selling any clunker. They've got standards.
Oh, yeah, I was reading about their inspection process. Something about 150 points.
Yeah, the Carvana certified 150-point inspection. Every car they sell goes through it. Got to make sure they're putting out quality, especially online where you can't, kick the tires in person.
Makes sense. Builds trust. So speaking of, trust and all that, let's talk about the folks running the show.
Management, you mean?
Yeah, the management team, the people calling the shots.
All right, so the company was founded by and is still led by Ernie Garcia III. He's been through a lot with the company, ups and downs. People seem to respect his vision and how he's weathered the storms, so to speak.
Yeah, I've heard he's a pretty resilient guy.
Hmm.
But it hasn't always been easy, right?
Not exactly. There have been, let's say, bumps in the road. People have raised concerns about, how efficient they are, their financial decisions.
And I think they even ran into some regulatory issues, right?
And one move that really got people talking was when they bought Edisa, specifically their U.S. physical auction business.
Oh, yeah, that was a big deal. Didn't they do that to, supersize their reconditioning capacity?
That was the idea. The potential is huge. We're talking possibly up to 3 million vehicles a year they could process through that network.
That's crazy. But, I mean, that kind of growth, it takes serious money.
Mm-hmm.
And that brings us to the elephant in the room, right?
Oh, it's the debt.
Yes, the debt. It's definitely something you can't ignore when talking about Carvana. Significant, right? Like really high debt levels.
Yeah, pretty high. And that's got investors worried, naturally. The question is, can they handle it? Is it manageable given how fast they're growing, or is it, a sign of trouble brewing?
Yeah, that's the million-dollar question, isn't it?
It really is.
So let's dive into those financials, see if we can get a better sense of what's going on. From what I've seen, their revenue growth has been pretty decent, but the profitability, a little inconsistent.
Yeah, a bit up and down, you're right. But they've been working on it, cutting costs, trying to be more efficient.
And it looks like they've managed to achieve positive free cash flow, which is, I think, generally considered a good sign.
Absolutely. It means more cash coming in than going out on the day-to-day operations. That's healthy.
So a point in their favor, but that debt thing, It's still hanging over them, isn't it?
Yeah, for sure. We got to figure out if what they're doing now, financially speaking, is strong enough to support that debt and still allow for, healthy long-term growth. That's key, especially if you're thinking about, investing.
Okay, so we've got a handle on their business model, the management team, and a snapshot of their financials. But what about the big picture? How's the market feeling about Carvana right now? We'll dig into that after a quick break.
So we've looked at the numbers, but I mean, what's the overall vibe? Are investors feeling good about Carvana, or are they like running for the hills?
It's kind of mixed, actually. I mean, yeah, making it to the Fortune 500 that fast, that definitely turns some heads.
Yeah, that's pretty impressive.
It is. But there are different opinions on what's next for them, Like some analysts are saying, hey, this stock could really take off, but others, not so sure.
Interesting. So like, what's causing that kind of split?
Well, some recent news hasn't helped, There was that short seller report from Hindenburg Research. Raised some red flags.
Oh yeah, those guys. They don't pull any punches.
Nope, they don't. And that kind of report, where someone's betting against a company and then shouting about all the bad stuff they found, that can spook investors pretty bad. Yeah, no kidding. But wait, didn't they also have some good news recently?
Right. They managed to renew their loan with Ally Financial, which is, a big deal in car financing.
So that's got to be reassuring, right? Like, someone still believes in them.
Exactly. It kind of balances out the negativity a bit, shows that a major player in the industry is still willing to back them.
So yeah, like you said, it's a mixed bag. But speaking of who's backing them, what about their ownership structure? I heard it's kind of unusual.
Oh, yeah, it's definitely unique. The founder, Ernie Garcia III, and his dad, they actually control most of the company.
Wow, really? So like a family business almost?
Pretty much. And that raises some questions, about corporate governance. Are they making decisions that benefit everyone, all the shareholders, or just themselves?
That's a valid concern. I mean, when so much power is concentrated in a few hands, things can get a little opaque.
Yeah, exactly. Transparency becomes really important. But, I mean, it's not just them, right? There are other big investors involved.
Yeah. Like who?
Institutional investors, mostly. The big firms like T. Rowe Price, Vanguard, those guys. They've got significant chunks of the company.
So it's not all just family control. Interesting. But to really figure out if this whole thing's going to fly, I think we got to look at the risks, right? What are the potential pitfalls here?
Totally agree. SWOT analysis time.
You read my mind. Strengths, weaknesses, opportunities, threats. Let's break it down, starting with the good stuff. What are Carvana's strong points?
Well, they've got a pretty solid brand. People recognize the name. And their technology, definitely innovative. Like, have you seen that 360-degree vehicle imaging? It's pretty cool.
Yeah, it's wild. You can really get a good look at a car without even leaving your house.
And then their business model, being vertically integrated like that, it gives them a lot of control, from buying the cars to fixing them up to selling them. It can save them money, make them more efficient.
Okay, so strong brand, cool tech, efficient model. Those are some definite wins. But no company is perfect, right? Weaknesses.
Oh, for sure. And we've got to talk about that debt again. It's a big one. And, relying so heavily on online sales, that can be risky. What if people suddenly decide they want to go back to dealerships? Or what if something happens with e-commerce in general? A big security breach or something.
Yeah, anything that shakes people's confidence in buying stuff online, that's a problem for them.
Exactly. And while they've built up a lot of their own infrastructure, they still use third-party vendors for some things, like actually delivering the cars.
Right. And relying on other companies. That can lead to, headaches, hiccups in the process, maybe some customer service issues.
Yep, all potential problems. Okay, so we've covered the good and the bad. Now what about the future? Opportunities for growth, threats on the horizon. What do you see?
I'm ready for it. Lay it on me.
All right, so opportunity. Well, the used car market's huge, and it's only getting bigger, so there's definitely room for them to grow, to grab more market share. And that ADESA acquisition, if they can make that work, it could really boost their capacity, give them a bigger presence in the wholesale market.
And they could even expand internationally, right?
Yeah.
Like, who knows? Maybe Carvana vending machines popping up all over the world.
Hey, it's possible, but let's not get ahead of ourselves. Threats? Oh yeah, there are plenty. Competition's fierce. You've got the traditional dealerships, they're not just going to roll over. And then you've got other online players like Vroom, CarMax. They're all fighting for the same customers.
So it's a real battle royale out there.
It is. And then there's the economy, right? What if we hit a recession? People might hold off on buying big-ticket items like cars, and that would hurt Carvana for sure.
Yeah, that's a real risk. And then there's always the government, right? Regulations could change, new rules could come in, and that could throw a wrench in their plans.
Always a possibility. So yeah, Carvana. They're operating in a very dynamic environment. Lots of potential, but also a lot that could go wrong. It's a high-stakes game.
Okay, so we've got a good grasp on the business, the financials, the market sentiment, the risks. But you know what we haven't talked about? That surprising website feature I mentioned earlier. The thing you wouldn't expect from a used car company.
Oh yeah, you've been teasing that for a while. What is it? Spill the beans.
All right, all right. Remember how I said Carvana is all about shaking things up, doing things differently? Well, get this. They have, wait for it, car vending machines.
Car.
Vending machines for cars, like giant multi-story buildings where you can actually pick up your car.
Are you serious?
Dead serious. You buy your car online, and then it's like dispensed to you in this massive vending machine. It's like something out of a sci-fi movie.
That's wild. That's brilliant marketing, you know? It's so unexpected, so memorable. People are going to talk about that, share it on social media.
It's a total wow factor.
Yeah.
And it kind of sums up Carvana, doesn't it? They're not afraid to be bold, to try new things, to, push the boundaries of what a used car company can be.
Totally agree. It's definitely not your grandpa's way of buying a car.
So for everyone listening, the big question is, what do you think? Is Carvana a company you'd invest in? They've got this innovative approach, they're growing fast, but they've also got some serious debt, and they're facing some stiff competition. It's a gamble, right? A potentially big payoff, but also a chance you could lose your shirt.
Yeah, it's not a simple yes or no. You got to weigh the pros and cons, think about your own investment goals, your risk tolerance.
Exactly. This deep dive is just the starting point, It's up to you to do your own homework, to decide if Carvana is a risk you're willing to take.
And hey, if you're interested in learning more about, the stock market in general, how to analyze companies, make smart investments,
Be sure to check out the Stock Analytics AI YouTube channel. They've got tons of great content, super informative, and it's all free.
great resource. And a reminder to everyone, this deep dive is just for informational purposes, okay? It's not financial advice.
Investing in the stock market always has risks, and you should never invest more than you can afford to lose.
Do your research, talk to a financial advisor if you need to, and make sure you're comfortable with the potential ups and downs before you make any decisions.
Well said. Thanks for joining us on this deep dive into the crazy world of Carvana.